Hello there, welcome to this edition of Global Business Africa. It is essentially week 51 of 2014. We've got just one more, give or take, to go until the end of the year. And we've got your usual fix of all the business news stories you need to know about from across the African continent. I'm Raman Yang in the Kenyan capital, Nairobi. Here's what's coming up in the next 30 minutes. We'll keep a close eye on Nigeria, looking at the effect of its economic crisis on its polls in February 2015. South Africa gets a fighting chance after it narrowly avoided a downgrade by Fitch. And Syrians are making a living in Egypt by doing what comes naturally to them. We're looking at the explosion of Syrian cuisine in Egypt. Right then, let's start tonight in Nigeria. Barely a year has passed ever since it vaulted over South Africa to become this continent's largest single economy. Still, though, it does face an enormous array of economic challenges. Right at the top of that list, a dip in global oil prices that has battered the naira to record lows. Other issues include steep budget cuts, corruption scandals, insecurity and austerity measures, which many Nigerians really don't like, and political uncertainty as well around the 2015 elections. Now, economists are warning that a pre- or post-election spending surge will boost inflation. Others, however, argue that the oil-producing nation can weather the current cocktail of political and economic problems if it elects a leader who can implement vital reforms. Now, speaking of leaders and reform matters in Nigeria, the country's Trade Minister Olusegun Aganga says the Boko Haram insurgency that's concentrated in the northeast is affecting the flow of investments into the country. However, he says the scale of the problem is no reason to be alarmed. He says the security challenges notwithstanding, some investors are making long-term bets on Africa's biggest economy. Here's part of his conversation with CCTV's Deji Patmos.
The Boko Haram insurgency in the country, is it in any way affecting investments that are coming in?
It's natural. There's no way you can say it has no impact. Of course it has impact. But the question is how much impact is it having and how have we been able to do well? I think what the statistics tell us, not just Nigerian statistics, but international statistics, and I will quote UNTA, that Nigeria, in the last 3 years, Nigeria was the #1 destination for investment in the whole of Africa for 2 of those 3 years, and was in the top 3 in the 3rd year. So that tells you that regardless of what is happening in the country, the momentum is very, very strong because the opportunities are great in Nigeria.
Our dependence on oil is being exposed now with the falling prices of oil in the international oil market. What exactly are you doing? What is the government doing to diversify this economy and cut down our dependence on oil?
Now, the fact that we're dependent on oil should not be news to anyone. We all knew this many years ago, and we knew it was the wrong policy. But I must say that what we need to realize, as far as I'm concerned, is that we knew that was a risk, we knew that was an issue, but we started addressing this right from 2010, 2011. You will recall that it was the first time that this government set up the Sovereign Wealth Fund. It was set up because, and remember I was Minister of Finance then, it was set up because oil is a depleting asset. It was set up because we were too dependent on oil. And there we created 3 boxes. One is to save the money for future generation, invest in other areas. The second is to invest in infrastructure so that we can diversify the economy. And the third was to go into a stabilization box in case there was sustained fall in oil prices. So we foresaw this in 2010, 2011. Unfortunately, it was not rigorously implemented, and that's not the fault of federal government. But we did that. We had a vehicle in place. We've started using that already. That's the #1 response to that. You will also recall that once in 2011, 2012, we started what we call the Nigerian Industrial Revolution Plan, which was launched by Mr. President. The objective of the Industrial Revolution Plan is very simple. It's to diversify the economy and diversify our sources of revenue for the governments. So it addresses, it's the answer to the issues you're talking about. All we need to do is just accelerate the implementation. So what we're doing, if you look at all the sectors in the Industrial Revolution Plan, these are areas where we have competitive, comparative advantage, and yet we've depended on importing items.
How does the government intend to keep Nigeria the #1 economy in the continent with all the challenges? Your Naira has just been depreciated.
These challenges, as the Japanese will say, or the Chinese will say, these challenges present opportunities for us. The news said, I see this as great opportunities for the country. It gives us the opportunity to accelerate the implementation of the Industrial Revolution Plan. I already know the 8 or 10 products that replace oil already. All we need to do is produce them already. So there's no problem. It's just a matter, every country is going through one challenge or the other. It's not just Nigeria. Most other countries have done their structural adjustment many years ago. It's not an issue, but we have choices. We have options. We are a blessed nation, and we must not squander the opportunity. To me, this is an opportunity to make changes, and we have already started making the changes. Thank you.
Now, we're still in Nigeria. Headline inflation over there fell for the 3rd month in a row in November as food price increases slowed down even further. In November, the CPI was about 7.9%. That's down from 8.1 in October. The food price index went down to 9.1% from 9.3. Nigeria's inflation rate has remained in single digits for the last 2 years, but it could rise in December as a result of the central bank's 8% devaluation of the Naira in late November. Now, the CBN also did raise its base lending rate about 14% at the same time to help shield its foreign reserves. It has spent billions defending the Naira from the impact of plunging oil prices to no avail, really. A 45% decline in global oil prices that started way back in June has decimated revenues for the oil-dependent country. Now then, let's keep a close eye on developments not just in Nigeria but in South Sudan as well. These are two oil producers on completely opposite ends of the oil producing spectrum. Miriam Bema joins us now for a deeper look at both countries live from London. Miriam, with regard to Nigeria, we've got a weak Naira, we've got endemic oil theft, an election in February 2015. Between these cocktail of factors, what is investors' perception of Nigeria as an investment destination right now like?
Well, Rama, analysts say that this time around money is running low and Nigeria's fiscal position is weak going into the election. But then others argue that campaigners are heavily funded on both sides and have already stockpiled before the oil price crash that we saw, so the impact would be less. Investors are still confident, though, on Nigeria, given its debt is still quite low. We have to remember that compared with many developed economies. In fact, investors bank on the fact that Nigeria, with its low debt ratios and fairly liquid markets, has more capacity than most countries to boost borrowing, especially through a short-term price shock. And the common thought is that policymakers need to build domestic demand. That's where the focus needs to be to help the economy. It's the purchasing power, the disposable income that constitutes a stronger market. That, combined with strengthening the labor market, will be the key tasks to turning the economy around.
Indeed. We've seen also two unions going on strike today, members of the Petroleum and Natural Gas Senior Staff Association being one of them. The last such strike in September, well, really passed without a ripple in supplies, except, of course, for Ghanaian natural gas supplies. Will this one be any different?
You know, Rama, the expectation is the same this time around, with analysts very much telling me that they're betting that crude production won't be affected. Having said that, though, all eyes are on the strike, with many watching the outcome of long-standing demands. You know, things like adoption of the long-awaited petroleum industry bill, designed to very much overhaul the corruptness in the sector and tackle unfair labor laws by both foreign companies and the government. You know, if any changes come out of the strikes, that could have a big impact on the supply side within the country. But on the international front, there won't likely be any ripple effect.
Indeed. Let's move on to South Sudan. It's been in civil war since this time last year, and its production, as far as oil is concerned, has gone down by about a third or so. What factors will influence oil revenues and production next year?
Well, the big one is weak foreign exchange reserves. You know, South Sudan's central bank has very much issued new restrictions on the sale of dollars to importers because of the dwindling reserves we've been seeing, of course, off the back of a slump in oil production. But let's not forget that oil is the country's single largest foreign revenue earner. And the shortage we're seeing in foreign exchange has left South Sudan struggling to pay for food and other important products, pushing up local prices. Now, with oil hovering around that $62, $63 a barrel, rising up, but hovering around that lower bit, and production dropping, it's really a lack of resolve after 10 months of negotiating over the unrest and civil war that we've been seeing. And investors will be looking at this critical situation, trying to see how the peace talks play out. The expectation, though, is that it'll heavily dent the 2015 revenues.
Indeed, between the decline in output from South Sudan's mature fields and its civil war that's as yet unresolved, isn't South Sudan a destination that especially oil majors will simply avoid in future? We've seen Exxon essentially just saying, no, we're not going to explore for oil in Jonglei State. Won't others follow suit?
Well, you know, I spoke to a lot of experts on this, and they're quite mixed reaction, but they're saying not necessarily. You know, it really all depends on whether or not we see the country stabilize. Investors have been keen to have access both through exports and imports, especially since South Sudan lacks foreign direct investment and very much a hard currency coming in. There's been a lot of debate over how soon we could see more foreign money in the country, especially since South Sudan has no domestic refineries. We could see oil giants harden up on providing more loans and advance payments, and perhaps look into more exploration and prospective projects. Because of the fighting, though, some foreign investors have abandoned plans to set up shop in South Sudan. Ceasefire deals that are not respected are not helping boost that investor confidence that we need to see. It all goes back to that one word, that key word, Rama, and that's stability.
Indeed, stability is the word. We'll keep tabs on this country and plenty more right here for you on CCTV Africa. That was Miriam Bemard live in London. Let's take it to the other end of the continent now. Late last week, South Africa narrowly, and I can't emphasize that enough, narrowly escaped another ratings downgrade. Fitch affirmed its sovereign rating of the country at BBB with a negative outlook. S&P kept its rating of South Africa at BBB- with a stable outlook. So, numbers, letters, what does this all mean for businesses and taxpayers? Here's Sumitra Naidu with some answers.
It was 10-1. Many were expecting a downgrade. Instead, South Africa received a warning to get its house in order. Both Fitch and Standard & Poor's affirmed their ratings.
I think it would be difficult to justify that South Africa isn't an investment-grade credit, but there's still a deterioration going on. And if that deterioration continues, we're going to see a further downgrade in the years to come.
It's a tough road ahead as South Africa tries to correct the imbalances, a constrained power supply, high unemployment and a weak economy. A current account deficit near 6% of GDP remains a concern for the ratings agencies.
When we look at the rating we have now, there are certainly a number of concerns we have, which would be around fiscal consolidation, which would be around the current account deficit, and last but not least, which would be around the weakness in the economic growth in South Africa.
Standard & Poor's currently has its rating for South Africa one notch above junk status with a stable outlook. If it dropped its outlook, a downgrade would be imminent. The agency believes South Africa can prevent that from happening.
For now, we have penciled in fairly dismal growth for this year, with real GDP growth of only about 1.4, 1.5% in 2014, a mild recovery in 2015 and 2016. And that's where the question marks are. If that recovery would not happen, that obviously would have implications. It would have implications for the fiscal side. It would have implications for the debt trajectory in the economy. And again, if growth does not materialize in the medium term, we need to see a policy reaction to a weaker growth.
South Africa has its work cut out for it. Government is under pressure to lift output, curb industry interruptions, create jobs and keep the lights on.
We need to look at the dynamic between economic growth and the actual budget deficit and other deficits that exist in the economy, including the current account deficit, and I would include the household deficit. Effectively, we need to actually be looking at a strategy where we can cut taxes and cut expenditure.
The new finance minister outlined a number of measures to stabilize the economy. He also announced a number of cutbacks in spending. The Deputy President, in the meantime, will tackle Eskom to ensure a more stable power supply.
The problem with Eskom is that there's a couple of assets that haven't been looked after. So you've got power stations that are breaking down. That needs to be turned around. So the maintenance needs to be pushed up, the costs need to be cut back, and yet you need to bring the skills into Eskom.
If South Africa gets it right, 2015 may look a lot brighter. Sumitra Nadu, CCTV, Johannesburg.
Over in East Africa, construction work has started at Kenya's proposed Technopolis, or Tech City if you prefer, Konza. It's a business process outsourcing project that essentially the country says will be the very first African silicon savannah. Well, that's the idea anyway. Over 300 investors are queuing in for the project. The government expects investments flows of about $100 billion or so. Speaking when commissioning access roads and the setting up of basic infrastructure at the site, the Deputy President, William Samoei Ruto, said the project will spur innovation, create jobs and elevate the country to a technological hub. The project is estimated to cost about $14.5 billion, and it will host a science park, a convention center, shopping malls, hotels, international schools and a health facility, among others.
Konza Techno City has a database of about 345 potential investors. This shows the confidence the global business community has in Kenya as a business destination, and more profoundly in the skills and talents available locally. The government is committed to this project. We see the big picture. We are determined to bring it to life. On the question of resources, I instruct the Cabinet and the Principal Secretaries for Treasury and Communication to work together and the board to solve some of the budgetary constraints that exist in the way of this project. The government is working towards achieving double-digit GDP growth, generating food surplus, boosting industrial and manufacturing capacity, and enhancing the use of ICT to actualize Vision 2030. Konza Techno City is at the center of our plans.
Quick run through equity markets here for you. The broad correction that we did see in some of the key markets that we do follow, Nigeria, for example, and South Africa, very much continuing into today. The JSE was dragged down to about a 2-month low. Exporters essentially being whacked right over the head by a rebound in the Rand. SAB Miller being among the worst hit. Its shares were down 3.4% on trading in Monday. When we come back, we'll be looking at how Egypt is readying itself to serve as a launching pad for continental free trade area. And rice farmers in Liberia adjusting to the threat of Ebola in order to keep the profits and revenues coming and to maintain jobs.
Sustainable development and a commitment to developing partnerships with Africa. Some of the key phrases already used at the Africa Global Business Forum here in Dubai.
There is a need for a predictable environment in which investors have to put their money.
Welcome back to the program. You're still watching Global Business Africa. Let's take you to Egypt now. It will host a summit where Africa's largest single free trade area is set to be launched in February 2015. Now, the tripartite free trade area, as it's known as the Grand Free Trade Area in some circles, will bring together a population of about 625 million people, and the economies in it will have a GDP combined of over $1 trillion. Yasser Kim looks at what Egypt stands to gain from hosting the summit.
The news of Egypt's efforts to establish the long-awaited African Trade Union was announced by Minister of Trade and Industry Munir Fakhri Abdel Noor, who said Egypt is working hard with member states to make it a reality. It's not an easy task. The idea to unite the 26 countries was first mooted in 2008, but never came to fruit. Egypt this time has a lot at stake.
Egypt wants to regain its leading role in the continent and prove to the world that it's back on its feet by hosting and influencing what could be a historic summit.
Egypt is a COMESA member, but uniting it with SADC and the EAS can be of greater political and economic benefit to Egypt, which is suffering from an acute recession since the 2011 uprising.
Egypt exported over $5 billion to COMESA states. It is relatively low, but imagine the exports and investments from a market double the size once the union is established. Egypt could be the logistical hub for African and Asian trade.
A host of transportation projects and bilateral deals have been signed with African countries to ensure an increase in overall trade with the continent. The next few months will be vital in Egypt's transition. It will host the African heads of state and the economic summit. If successful, they will lead to a boost in investments and trade that could very well help lead the country out of its economic crisis. Yasser Hakim for CCTV, Cairo.
Well, in Liberia, the private sector continues to be ravaged by the Ebola outbreak. Foreign firms generally scaled back operations and evacuated some of their employees. Local firms, however, didn't exactly have any choice. They had to sit in and ride out the storm, as Angelo Coppola now reports.
Liberia's business sector has suffered because of Ebola, but entrepreneurs understand that if they move quickly enough and adjust to pricing, they can actually make a business living.
That's why I decided to invest into rice, because rice in Liberia is our staple food, so it moves faster than almost all the commodities around.
While the investment was sound on the demand side, as the Ebola virus took hold, the shipping agencies and lines were pricing in the risk of stopping in Monrovia.
Okay, because they were complaining that Liberia now is an Ebola country, so most of the shipping agency were now, really satisfied of coming to Liberia. So they made Liberia as a last stopping point. The prices escalated a bit. So as it went up to the importer side, we ourselves went up.
As the epidemic begins to ebb, there have been a subtle change in Joseph's business, a newfound confidence.
People are getting, lively now. People are feeling that life is coming to Liberia, really, because Ebola is ending. As a result, people are now buying. You see, there's a change now.
Successful entrepreneurs also need a vision, a plan.
I want to see my business growing up, maybe to a bigger one. Maybe one of these days, I'll be one of the importers into this country. Yeah, I see that. I have a dream.
Business life in Liberia at the moment is rather tough, but it is picking up. And entrepreneurs understand if they're watching their market and they're watching their prices, they can actually make the two meet and they can survive. I'm Angelo Coppola for CCTV in Monrovia, Liberia.
Let's make a quick run through commodity prices, shall we? Oil, of course, very much our focus as well. Bit of recovery as far as Brent crude is concerned, 62.50, one of the more relevant numbers that we are seeing on our boards today. The UAE, however, sees absolutely no need to call an emergency meeting of the oil-producing group OPEC. As far as they're concerned, the market will essentially rebalance itself, echoing the line taken by Saudi Arabia. 4 years on after Syria's civil war started, how exactly are Syrian refugees making a living in Egypt? It has to do with the cuisine. We'll take you to a culinary tour next. Welcome back to the program. Almost 4 years have passed since Syria's civil war began. Thousands of that country's citizens have fled to neighboring states in the Middle East and North Africa. Some have settled in Egypt, so they're making a quick buck selling Syrian cuisine to the locals. Here's Robert Soy with more.
This area in the western suburbs of Cairo used to be a market where people bought and sold electronics. But today it's been transformed into a Syrian food area. Workers fleeing war-torn Syria have set up shop and offer a variety of Syrian cuisine to the market.
Any Syrian citizen that comes from Syria seeking a job in Egypt will find one. He is also free to start the business he prefers. Thank God that everything is available here. Anything we need is available. Any Syrian in Egypt have opened business projects, laboratories, tailor shops and various shops. Syrians are definitely working well in Egypt due to the encouragement of the Egyptian government to Syrians. And if it did not stand with us, we wouldn't have succeeded.
Egyptians love the food, and that has encouraged many Syrians to venture into the business.
I used to cook falafel in Syria, and I had my own shops in Douma and Harasta cities. They were big shops besides lots of other Syrian sandwiches that could be wrapped like those here. But here in Egypt, I can't expand my menu or sandwiches due to my living conditions. I just have to work according to my financial limits.
Most Syrians have opened restaurants, and I haven't worked in such businesses before. I try to be specialized in something because it's the first time for me to stand by a stall in the streets. And I decided to make tamari dessert. I thought that I will find Syrians preparing it here, but I'm the only one. Thank God, from the first day I felt satisfied with my sales, and lots of people loved it. Day after day, Egyptians began to like it. Its sales fulfill my expenses in general.
There are no official figures on the number of Syrians living in Egypt. Unofficial estimates put the figure at between 300 and 400,000, with some employed in various sectors of Egypt's economy. Robert Soy, CCTV.
As far as currencies go, pretty much the same trends that we've been monitoring in this particular quarter of the year. A bit of a recovery we're seeing in the Nigerian Naira, 178.75, the relevant number there. The Kenyan shilling heading in the opposite direction, 90.60. That's around 3-year lows right there. The South African Rand, the relief from dodging a downgrade from Fitch, essentially being very short-lived. It did get hit by a broad sell-off on oil-related sell-off rather, on emerging market currencies a little later on. Now then, here's what we're working on for tomorrow's show. We'll be looking at exactly how much has been stolen from developing economies through illegal financial flow. Some interesting content coming out from the Global Financial Integrity Study. We'll have those on tomorrow's program. And there's an air of economic optimism, shall we say, in Harare, Zimbabwe's capital. We'll be telling you exactly what is driving it and how you can make money off it a little later. That's it for this edition of Global Business. Send your feedback to Global Business Africa at cctv.com. And of course, when we're not on air, Facebook and Twitter are your ports of call. The news continues over there 24/7. I'm Raman Yang in the Kenyan capital, Nairobi. See you in 23 hours.